Joining us now to share his commentary on the day's market performance is Thami Netha from Shiloh Capital. Thami, hi, good to chat to you. You heard what's going on with our markets. Of course, Nedbank, the latest bank, to talk about what they're doing.
Our financial services infrastructure is quite strong in South Africa, the best of the BRICS countries. So our banking system is also quite resolute, and given the view of trying to get out of the grey listing environment, our financial services businesses have taken our banking business more specifically, have taken on, along with the Reserve Bank, have taken on a very strong stance around regulation governance, which has then put a more emphasis on quality earnings and quality revenues. They have managed to manage their risk. Now with the lower interest rate environment, I think that will continue to open up their ability to provide credit. So that kind of output or that kind of response to the market, I think, is appropriate for a bank like Nedbank.
It's interesting, Thami, because if you have a look what's been happening with the Financial 15, it's been a very strong week. You look at ABSA, we had Standard Bank also coming out as well. We'll be looking at the Purchasing Managers Index and other indicators as well. But I'm liking what I'm seeing when it comes to the SA economy at the moment.
Yeah, I think the economy is doing well in terms of the financial services side. I think we have to look at the production side, which is more mining and minerals. We have to look at retail, manufacturing. I think that sort of side of the fence is what we really need to focus on. There's a lot of work to do there, especially on the infrastructure side. But in terms of financial services, I think South Africa is quite a strong environment, especially continentally, and I think we'll always deliver value. Also, because of the regulatory hurdles, it's not easy for somebody to get a banking license or an FSP license on our side of the world. So there's a lot of oversight and regulation around our banks and their financial health. So I think there will always be some form of profitability or positivity around our financial services industry.
Yeah. Looking though at the PMI though, I mean, still below 50. I'm looking also as well at the RMBB, our Business Confidence Index. Below 50, but still they're increasing. They're getting a little bit bigger. Looking at business confidence at the moment, and you can see with business confidence a whole different thing. Green shoots. I think they surveyed 6 sectors, and only one sector came back saying, we're a little bit worried. What are you seeing here? All right, Thami, I think we've frozen you. Frozen at the moment. We'll have to dial you back in. So let's get you back into this. And what we can do at the moment, let's have a look at some of the stock picks from yesterday, just to get a sort of a bit of a vision. Oh yeah, you're back. Okay, the power of technology on Business Lunch. All right, Thami, if you can hear me, take us through the RMBB, our Business Confidence Index. Are you there? All right, you're not there. Okay.
Yes, I am.
You're there. Okay, all right. There we go. All right, we're just trying to get your picture up.
I hope that's better.
There we go. We've got
yes,
you. We've got you. Good stuff.
Yeah, so our view is that business confidence is often a difficult thing to measure because it is a lagging indicator. So it is based on the views that have happened historically, not necessarily projecting what will happen in the future. As people generally will only spend when they have a good feeling of the future based on what has happened in the past, ironically. What you'll find is those kind of measures, if they are not going down, it's often a good thing. What you want is stability or going up. And I think South Africa has a few policy decisions to make, especially around infrastructure development specifically. And once that has been cleared up, about where the country is going to spend its budget towards productivity, I think we're going to see positive business views. I think resolving this issue with the US, I think, is a primary key element. So we know where we sit with that. Engaging new partnerships with our South-South partners and sort of buttressing the US impact. Domestic production, especially industries like poultry, I think being protected is meaningful. So I think there's a scope and a view that one one can take about the future, but there's a lot of global uncertainty, not just South African uncertainty, which drives some of these confidence factors, especially for an economy driven by prices and commodities that they have to sell offshore.
Yeah. It's interesting, excuse me, it's interesting because if you have a look, say, for instance, what's happening with the global economy, and looking at a figure of about 4%, that's the growth rate that they're looking at. Thami, looking at that, I mean, we're also looking at what's happening in EU, Bank of Japan as well, and their interest rates. We're also looking at what's happening in the United States. They're going to cut their interest rates. Where does South Africa stand in all of this?
I think we're relatively in good health. We've got low inflation. We can meet our debt burdens. Our energy problems have been resolved given where we were a year ago. We had an election where the ruling party lost the election, but government still continues. Things didn't fall over. We are starting to have some good commodity prices rebound: gold, nickel, manganese. So I think we have a positive view globally comparatively. Now, our issue is our size in retrospect to our much bigger business partners like China, India, Russia, Brazil. So we have to specialize in nimbility. We have to be able to produce what we produce at good prices, at good measure, and do our best to keep our balance sheet as clean as possible. So I think we have a stable currency environment as well, which is well governed by the central bank. That I think all in all, we have stability, and we've proven to be a stable economy amongst the emerging markets. Now, what we need to do now is focus on, do we have the right infrastructure to drive growth? And my answer to that would be no. What we need is to start investing into our roads, into our rail, into our ports. We've done a lot of investment into our energy, but we need to continue to do so. And then once we have that kind of environment where individuals can warehouse, they can manufacture here, they can build, they can sell.
We'll have the right conditions. We'll be able to do something with that. And I think that's the big thing. We always see the president's speech, and he concentrates on infrastructure. You know, the proof of the pudding is in the eating, as they say. Right, now, before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
My stock pick is tied to the insatiable demand for power and energy that's growing, and it's being supported by not just a normal growing economy, but by the demand for AI supported consumption. So, and specifically in the US, the only way they're going to create the base load to support the demand coming from these data centers is through LNG, liquid natural gas. You know, the waiting list for gas turbines is 4 to 5 years now. There's such a lot of demand. But LNG prices have remained fairly subdued because it has been quite plentiful. But I'm betting, and I'm taking the view that supply-demand balance is starting to tilt, and that over the next 12 to 18 months, the demand for Henry Hub natural gas, which is the US natural gas, is going to turn upward meaningfully. And the way to play that is through EQT Corporation. They're the largest natural gas producer in the US. And I think they're very well positioned to benefit from that.
I'm also picking an offshore stock, one listed in Denmark, Novo Nordisk. I did choose it also earlier this year. And it's one of the biggest pharmaceutical companies in the world. Between Novo Nordisk and Eli Lilly, they dominate the weight loss drug market and insulin drug market. And Eli Lilly has just completely dominated Novo Nordisk when it comes to winning market share and coming out with better products. And Novo Nordisk have really done a lot of bad things. They've had own goals. They forgot to register some of their patents, like in Canada. And that negative sentiment has really driven the share price to quite low levels. Now, I think other than the GLP-1 drugs that they have, the weight loss drugs, the insulin franchise is still very strong. They're still developing other drugs as well. So the market is very, very negative, and I would say perhaps unduly negative, overly negative.
There we go, Thami. So two very strong stocks there. EQT Corporation. What are your thoughts?
I'm always concerned about commodity price volatility and those sort of energy transition risks. I think we in South Africa, for example, or on this side of the world, we don't we're not great at gas. So we rely a lot on coal fire and electricity. But they have shown some sort of robust cash flows. Their balance sheet is strong or strengthening with disciplined capital allocations. And I think there's some resilience, but I'm always concerned about commodity price volatility and how that would impact the US and where EQT plays.
Yeah, you're quite right about that when it comes down to commodities. We've seen a rush on gold, on platinum and others, but yeah, it can go the other way. Right, the other one, another offshore, Novo Nordisk, your thoughts?
I think they're addressing a big market. I think diabetes and obesity has become a very significant element in our society, or more so in Western society. And I think those health issues are actually a large addressable market, and they are addressing it over the long term. Now, there's always going to be short-term headwinds, regulations, guidance cuts, sort of like margin pressures. But I think over the long term, if I were to choose between the two, I would look at Novo, because they're addressing a very big concern within our industry. And I think we are going to see, in my view, we're going to see scenarios in which governments are going to come into the fray because their populations are unhealthy, especially Western governments. America, I think, at the top of that. I think to South Africa, to some degree, we have our issues with obesity, but it's not as, and diabetes, but I don't think it is or will be as prevalent as it is in the UK and in the US. So I think large market, they're addressing it, and it's going to become a national agenda issue, I think, over time.
Yeah, totally different. No commodities there, which is really good. Okay, now for your stock pick, what are you looking at?
Antofagasta. I've struggled to pronounce it, but they're a commodity in Chile. And I think they're addressing a key, as they say, Mr. Copper is the economy. I think they're profitably addressing key issues around cars, electric cars, new energy technologies, and infrastructure development, which is happening at a very large scale across the world or across the developing markets. So I think them being situated in South America enables them to address large developments in South America, in Europe, as well as America. So I think they are going to be a good stock to watch going forward. But as usual, we always take time to look at market volatility. We look at commodity price volatility. But our view is they are going to be a sustainable copper producer who will be able to withstand the pressures and will benefit from the global demand for green energy related technologies and decarbonization.
Antofagasta, thank you so much for that, Thami. I do appreciate you taking the time. It's a nice stock pick for a Wednesday. Thank you so much, and good to have you on the show. Now, that was Thami Netha from Shiloh Capital.